Hey gang, welcome to Time in the Market, the investing channel with a long-term focus. Taking a look at Pepsi Co. this morning. Stock is basically flat after their Q3 earnings release. Was slightly better than expected, but nothing amazing. This is a stock that's basically flat in the last 5 years. It traded at $138 in 2020. It's trading at $138 today. Yes, you've gotten a dividend, but if you're a PepsiCo investor, you're not very happy with the performance of the stock, given what the stock market has done during this time frame. However, the question does become, are we getting to a spot that makes stocks like this interesting? Right now, there's a pretty intense run in the stock market. I have benefited from it a lot. Some of the stocks I've talked about on this channel are up fivefold in a matter of months because the AI trade is so hot and people are ignoring some of these more mature, slow-growing dividend payers. That's not to say they're inexpensive. I mean, PepsiCo is still trading at a P/E ratio of 25x. That's relatively expensive, and we'll look at that in a second, valuation-wise. But it's a steady Eddie company. Interest rates are falling, so maybe, just maybe, investors will start to look at some of these safer havens as they get a bit more worried about some of these high-growing and very expensive companies that are out there. And also, they look for some sort of yield when bonds don't offer it anymore. And you look at these earnings, they're not very impressive. I mean, that's the thing. That's why Pepsi hasn't been all that amazing in terms of returns for investors. Top line growth of 1.3% after divestitures, core EPS shrinking 2%, year to date up 1.5% on the revenue side, down about 3.5% on the EPS side. Not very impressive. They talk a big game around optimizing cost structure, and they have a strong pipeline of innovation to accelerate portfolio transformation. So a lot of buzzwords in there, just like you hear with a lot of these consumer-based companies. But at the end of the day, it's PepsiCo. What does innovation mean? Are they going to have cheaper cans? Are they going to have a Pepsi cherry flavor? What does it mean exactly? Because it's certainly not showing up in the earnings as of yet. And I think the concern for me mainly, and I think for a lot of investors, is that there's continued shrinkage in volume every time there's an earnings release. Yes, revenue's up a little bit in Q3, but volume's down 1% on convenient foods, on beverages, some growth in Asia Pacific. But if you look at PepsiCo Foods North America, volume down 4%. So they're really growing revenue, but a lot of that is just coming from them raising prices. And that happened in 2020, 2021, 22, 23 as inflation was really a problem. However, there's a certain point where like pricing gets out of whack with what other options are out there. So you look at Pepsi, look at some of these brand names that they have. When does the store brand become a lot more interesting? And we're getting to a spot where some of these store brands are just taking their lunch because people can no longer afford PepsiCo branded products. The other problem is that they do need some margin optimization. You know, the margin profile of Pepsi is way below something like Coca-Cola. Coca-Cola is just a better company, a better stock. And if PepsiCo can even get a quarter of the way to where Coca-Cola is, then maybe, just maybe, this becomes a really interesting investment. But they haven't really done that. They haven't really shown that they can improve their margins in a big way in the last decade. They've been relatively consistent. So what changes are they going to make that happen? So as we look at guidance that they're giving for 2025, it's about what you'd expect. Some benefit from a lower than expected foreign exchange translation headwind. So EPS is a bit better than expected, but still low single digit increase in organic revenue. Most of their money going towards the shareholder in the form of dividends, and some of that going back to the shareholder in the form of a buyback. So as you look at that growth, it's kind of what you're expecting for the next couple of years. If you look at the estimates from 25 onwards, it's low single digits, maybe a bit higher in 28, 29, etc. But this is kind of what the company was in 2016, 2017, prior to the pandemic, low single digit growth. And the stock traded at a 5 to 6 to 7% free cash flow yield at that time. They were just investing a lot of money into growth. People do say it's cheap in a lot of areas because they'll look at the dividend yield of 4.1% or whatever it is, and that's about as cheap as it's ever been. Back here, it was trading probably at about a 2.5% dividend yield, so it's cheaper from that perspective, but they're using more of their money towards the dividend now than growth than they were back then. And that's certainly showing in some of the growth. The growth they saw in 2020, 21, 22, 23, a lot of that just came from inflation. They were able to raise prices. They did make some acquisitions, take on some debt. But at the end of the day, that inflation boom, I guess, is sort of done from a revenue growth perspective, and that came at the cost of volume decreases. So the prices are higher, yes. In 2025, the revenue is higher, but volume is probably lower than it was in 2020 in a lot of ways on some of their core products. They've made some acquisitions, some divestments, etc. But end of day, this is a company that's a bit different in a decent amount of ways. They've kept their margins about the same, but they've become a company that's viewed by the market differently from the perspective of what's ahead for Pepsi. Is this what it's going to be forever, or can they actually grow from here? And again, free cash flow yield isn't the only thing you'll look at. If you look at valuation here, if we look at normalized PE ratios, let's get rid of the free cash flow stuff. It's not that expensive. You go 10 years back, you go as far back as this data is there. It's about as cheap as it was in 2013. From a dividend yield perspective, it's as cheap as it's ever been. I did acquire some Pepsi for my dad's portfolio when it was in this 4.4% range, trading in the 130s. So I think it's an interesting buy there if you're a dividend income focused investor. But I still don't think it's going to be like an all-time amazing return, because if you go 5 years out, this is a 0% annual return plus the dividend, so maybe 4% return. 10 years out, this is kind of going back to those cheaper days that I was looking at where PE ratios were kind of where they are today, 3.5% return. And maybe you go back to 2014 or wherever, and even all the way back to 2006, you're still looking at an annualized return of 4.7% plus the dividend. So maybe you're in the high single digits, which isn't bad by any means, but that's kind of what you would expect if you buy Pepsi around this price point, which I think is a reasonable expectation to have. So as we look at the valuation disclaimer, this video is purely for informational, educational, and entertainment purposes only. It is not investment advice. Keep that in mind. So we've got Pepsi. They do share buybacks of about $1 to $2 billion a year, some stock-based compensation. Like I said, the majority of their money, 100% of their free cash flow in 2024 actually went towards the dividend. It's about a 4.1% dividend yield based on what they're paying today. So they're going to generate $8 billion in free cash flow, pay $7.7 billion out in dividends. That means they don't have a ton of money left to buy back shares without taking on debt. They do have a little bit of debt, so they have to keep that in mind. So I think the reality is that dividend growth is going to be anemic going forward. I have it at 4%. It might even be lower, but that's what I have here. Growth for the evaluation here, I have at 1% for 25, jumping up to 3%, 26 onwards. Some of those products they're releasing, some of the acquisitions they've made, etc., might help, whether it's Poppy, whether it's some of those food brands like Siete, etc. And then I think margin optimization is going to be key here. 8.6% in 2025 for free cash flow, up to 9.6% for 2029. Again, compare that to something like Coca-Cola, which is an all drinks brand, so that's different. That's in the low 20% range. Can they get higher here? Maybe, but this is where I'm pegging it for now. And then most of their money going towards dividends. Like I said, we got 97% of their expected 2025 free cash flow going towards the dividend, maybe down to 90% with expansion of margins and the growth by 2029. So they have about 10% left towards buybacks, offset by stock-based compensation. So not a lot of buyback yield here. The majority of their return is coming from slight growth, margin expansion, plus the 4% plus dividend that you're going to get at today's prices. If you look at where you're sort of pegging the true valuation of something like Pepsi, is it 5%? Is it 4%? Is it 3%? I have it in the 4.5% range. That seems reasonable to me. If I look at today's prices with this price point, gets me to expected return of about 7.8%. Generally, when I look at investments, I look at a 10% target return or thereabouts. So if I put a 6% in here, plus the 4% from the dividend, if I'm targeting a 10% return at these free cash flow yields, gets me to a fair value of $125 or thereabouts, or about 10% below where it's trading today. And I don't think that's a crazy assumption. If you look at 124 and the 7.8% expected return based on the price of 138, that's kind of what you've gotten as a Pepsi investor in the last decade plus. If you're a long-term shareholder, it's not amazing, but you're getting, low single digit growth plus the dividend plus, 2% growth off the dividend. So maybe that gets you to 7 to 8% returns. There's obviously a little bit of downside here. This is a stock that's traded in the 5 to 7% free cash flow yield range when it was growing in the low single digits back in the 2013 to 2016 range. That gets you to a 0 to 6% return, kind of what you've gotten the last 5 years. That's not crazy either. However, if you look at what's happening in the bond market, well, those yields are shrinking, rates are coming down. Maybe people will look at yield in other areas. That could make stocks like Pepsi interesting. If you get to a valuation of 4%, you get a 9% return. If you get a valuation of 3%, you get a 15% return. A lot of that just coming from multiple expansion. That's what happened in 22, 23 when the stock traded at $180. So that's what you would need for that to happen again. Until then, you're sort of looking at what's a reasonable valuation for a marquee name like Pepsi, and I think 4.5% is reasonable. If I want more than just 7% returns, I probably need this to trade in the 125 range, and even that sort of assumes good things happening in the next couple of years in regards to what we've seen the last 2 years and what they're projecting for 2025. You're sort of getting back to growth. You're sort of expanding multiples to basically all-time highs by 2029. I think they can certainly do that, but with the pressure on volumes, with price increases, etc., this isn't a business that's like an absolute yes, I have to buy it at 138 just because the dividend is at all-time highs. The dividend is at all-time highs because the business itself is kind of humming very slowly along. It's not destroying itself by any means, but it's not going to generate tremendous returns. And maybe that's not what you need. The reason I bought this for my dad is because I think it's safer than the rest of the market and he needs the income. And I'd rather have 4% yield that's going to grow even if it's by 2 to 3% every year than a long-term bond that's never going to grow earnings and probably is going to lose value to inflation if inflation's an issue. This is a very small portion of his portfolio. There's still a lot of growth in there, and I think the thesis right now in the market is still growth above all else because those stocks are performing so well. But maybe that turns relatively soon. If there's some weakness in the market, some weakness in the economy, a company like Pepsi will suffer too. Their earnings might shrink, but they're not going to drop by 70% like some of these other stocks might. They might drop by 20, 30%, and then the stock becomes really interesting. If you get to a price point that this is in the low 100s, then you're looking at a potential 14% return after dividend. That's when it kind of gets interesting from a long-term perspective. But at today's prices, it's like, well, this has gotten you a 3% return maybe after dividends in the last 5 years, maybe 7% in the last 10 years annually. That's maybe what you're getting on the top end at today's prices. So it's not exciting, but it's also not meant to be. It's Pepsi. It's growing at 1 to 2%. It's maybe improving margins. It's growing its dividend a little bit. One thing I think they might consider is some sort of spin-off. Like they have this beverage business, they have this food business, they have a bottling operation that they have in-house that they bottle for other companies like Celsius. They own, preferred stake in that business. They actually sold off Rockstar Energy to Celsius as well. Maybe they spin off their beverage and their food divisions into unique businesses like everybody else is doing, because their beverage business could probably get a premium from the market. It's probably growing a bit faster than the foods business, probably has higher margins. I mean, you look at Coca-Cola, like I mentioned before, low 20% margins in that business. Why is Pepsi at 9.6 as a max? Can it go higher? That's kind of what you would want if you're thinking this is going to beat the market in any fashion, because right now, based on these assumptions, I don't think it is. What do you think? Let me know down below. Leave a comment. Let me know what you think about Pepsi. And if you want me to review any other companies, let me know as well. Subscribe, like, all of that good stuff. And as always, thanks for watching. Bye.